Good morning, everyone. Welcome to Transnet's presentation of the annual financial results for the year ended 31st of March 2025. My name is Ayan Nashlezi. I will be facilitating the session this morning. Leading the Transnet delegation is the chairperson of the board of directors, Dr. Andrew Sangu. He is joined on stage by the executive directors, Group Chief Executive, Advocate Michelle Phillips, as well as our Group CFO, Ms. Nsiko Mafumulo. I'd also like to acknowledge members of the board who are present in the room and online, as well as members of our Group Executive Committee and the CEs of our operating divisions. A warm welcome to members of our investor community and the media. Thank you for taking the time to join us this morning. We're going to run today's program as follows. The chairperson of the board will make his opening remarks. He will be followed by the presentation by the executive directors, after which we will then take questions from both in the room and online. Without any wasted time, I'm going to request the chair to come up, please.
Ladies and gentlemen, good morning. On behalf of the Board of Directors, I'd like to extend a warm word of welcome to all of you at this presentation of the Transnet financial results for the year ended 31 March 2025. The financial year 2024-25 represented the second and third phases of the Transnet recovery plan, which has been in implementation since October 2023. This plan represented a shift towards improving operational performance and leveraging partnerships so that we can deliver on our mandate to enable economic growth through appropriate port, rail, and pipeline infrastructure. We are encouraged by the noticeable gains achieved in key areas of the plan. We launched the plan amid falling freight volumes and inefficiencies due to lack of available and reliable rolling stock, failing port equipment, massive maintenance backlog, and poor rail network. The enduring images of congested ports and equipment shortages in late 2023 are a constant reminder of how far we have come in the past 2 years. The tactical interventions implemented through the recovery plan have heralded tangible improvements in rail and port operations. We are seeing an encouraging shift towards an upward trend in rail volumes with year-to-year increases in volumes. Our ports have also seen improvements in service delivery across the board. The recovery plan has enabled investment in critical equipment, thereby reducing backlogs and improved terminal efficiency. Capital investment is an important indicator of our commitment to long-term growth and competitiveness. These investments are not just about money. They demonstrate our intentions to enhance capacity and efficiency. Without sustained investment, our infrastructure will deteriorate, leading to operational inefficiencies and capacity constraints. Investment in key ports and rail infrastructure is the bedrock of Transnet recovery trajectory. Over the next 5 years, Transnet plans to invest 127.7 billion rand in capital. By far, the majority of this capital expenditure will be targeted towards sustaining capital focused on projects to maintain and refurbish our infrastructure. The recovery plan has laid the groundwork for positive operational and financial momentum. Group Chief Executive Michelle Phillips will provide more details on the progress we are making across the business to revitalize our operating performance and embed financial resilience. Transnet's huge debt burden has placed a considerable strain on our financial health, as it hamstrings the ability of the company to generate the cash it needs to stay afloat. The borrowing costs consume a disproportionate portion of our cash flow. This has a direct impact on our ability to, for instance, repair and replace aging equipment, fund expansion and strategic growth projects that are meant to enhance asset optimization and the maximization of utilization of existing assets. The government guarantees the 47 billion rand received in December 2023 and the 146 billion rand received this year in May 2025 and July 2025 represent a shared commitment to build a resilient and sustainable Transnet, capable of fulfilling its role as the backbone of South Africa's freight logistics chain. This support is a critical lifeline for Transnet, allowing us to manage our debt and fund future capital projects. We appreciate the support provided by government, specifically the Department of Transport and the National Treasury. Amid the promising signs of recovery, we are not out of the woods yet, as several challenges persist. Infrastructure damage through vandalism and theft has far-reaching implications for Transnet and our desire to drive freight volumes. These criminal activities, such as theft of copper cables, overhead traction equipment, and signaling systems, cripple Transnet's operations and harm the economy due to operational disruption and poor service delivery. They lead to huge financial losses because of the expenses incurred to replace stolen or damaged equipment. Significantly, Transnet's inability to move freight and cargo due to damaged infrastructure results in lost revenue. The board is equally concerned about our safety track record. A strong safety culture is the bedrock of operational excellence. As we invest in modern, reliable equipment, we should, in equal measure, embed a safety culture and mindset of accountability and care, prioritizing zero harm. I want to talk about structural and strategic reforms. Transnet is currently undergoing transformative reforms to address operational and financial challenges by, amongst others, introducing private sector participation and creating a competitive and more efficient logistics sector. Our rail reform journey to create a modern and inclusive rail system as set out in the Freight Logistics Roadmap, the National Rail Policy of 2022, and the Economic Regulation of Transport Act 2024 is well underway. Transnet fully embraces this policy imperative, and we are making solid progress in this regard, in line with the expectations set out by government. The white paper on the National Rail Policy, published in March 2022, provides for fair and transparent access to multiple railway operators, and thus to allow for competition on the Transnet rail network. We are proud of the critical milestones achieved so far. To facilitate third-party access, we have established Transnet Rail Infrastructure Manager, TRIM for short, as a standalone division within Transnet. In December 2024, we published the network statement for the rail network in South Africa and in Zambia. As part of the rail reform process, Transnet is implementing a rail slots allocation process as prescribed by the network statement. In this regard, and as announced by the shareholder minister a few weeks ago, we have shortlisted 11 train operating companies who are now progressing to the next stage of the allocation process, which is negotiation and conclusion of contracts. Driven by the need to enhance competition and address inefficiency and underinvestment, the corporatization of TRIM and Transnet National Ports Authority is progressing well. These processes are another mechanism to crowd in the private sector by creating a more attractive and stable environment for investment. In closing, let me express the board's sincere gratitude to the Group Chief Executive, Michelle Phillips, Transnet executives, managers, and employees who are going about the momentous task of turning the company around with passion, wisdom, and massive commitment. The board recognizes and appreciates this great work that you have put in. Your hard work and commitment will go a long way in enhancing and protecting the long-term value of Transnet for the benefit of all stakeholders. Thank you for discharging your responsibility with passion and purpose. Lastly, I'm deeply thankful to my fellow board members for their strategic direction, oversight, and counsel during the year under review. Thank you very much, ladies and gentlemen.
To the members of the Transnet board, the executives of Transnet, I see many of our funders are here this morning, members of the media, and all of the Transneters out there, good morning. Good morning. It is an honor and a great pleasure to stand before you today, leading one of South Africa's most important entities at a moment of both challenge and renewal, not only for us in Transnet, but for this country. First and foremost, I want to extend my sincere gratitude to the 50,988 dedicated Transnet employees, the people in the trenches. Their hard work, resilience, and commitment lay a firm foundation for our continued success. I would also like to thank our customers, the shareholder, all stakeholders for their continued trust and support. The Transnet story is inseparable from the story of our country. When our railways, ports, and pipelines function well, South Africa grows, trade flows, and our economy strengthens. When they falter, the ripple effects are felt across every sector, from mining and manufacturing to agriculture and retail. That is why our recovery matters, not only to us as a company, but to every South African. We are under no illusion about the scale of the task. The years behind us have tested this organization and strained confidence. But the evidence is clear. The tide is beginning to turn. Revenue is rising, losses are narrowing, and volumes are stabilizing. The foundations of recovery are taking hold. The strategy, people in the room today, the strategy is working. Our role as Transnet is bigger than logistics. We are modernizing critical infrastructure, opening the door to private investment, and laying the groundwork for South Africa to compete globally, especially as we prepare to host the G20. These are not abstract ambitions. They are practical steps towards a more resilient economy. And as I stand here, I do so with confidence in Transnet employees and in the partnerships we are building with government, labor, industry, and investors. But I also stand here with caution, because we know we cannot do this alone. Recovery is not an event, it is a journey. Discipline, transparency, and accountability must guide us every step of the way. Today, we will share with you not only the progress we have made, but the future we are shaping. A Transnet that is resilient, customer-focused, commercially sustainable, and above all, a driver of national growth. Because when Transnet works, South Africa thrives. So colleagues, you'll allow me, I'm going to take you through a very short presentation. We will be distributing the packs to everyone, so I'm going to pick up salient points that I think are important for all of us to know regarding the period under review. We will share with you who we are. I will take you through the business performance overview. The GCFO, Nosipho, will take you through the financial performance. I know that's why all of you are here and excited to hear what we're going to say to you. And then we'll talk about the look ahead and where we are going. Okay, I'm going to repeat this all the time. You have to remember it as you leave. Transnet's recovery is South Africa's recovery. What is Transnet? Who are we? Our asset base, I mentioned the 50,988 employees who are in the trenches every day. That is our total headcount. We manage an asset base of 366.9 billion rand. Our commercial footprint, you'll be aware, 8 commercial ports, 16 cargo terminals across 7 South African ports. We operate 132 maintenance depots across this country, 11 in engineering yards, and of course 6 rail and port manufacturing and maintenance facilities. Some of you will be aware this past year, by March 2025, we were able to introduce into the system the 43 new locomotives that we had been manufacturing in our factory in Durban. The previous record for Transnet was 22 in 10 months. Now 22 in a year. We've given you 43 in 12 months. Yes. We operate a network, a pipeline infrastructure of just over 3,100 kilometers, 30,400 railway network track, including the 2 heavy ore lines, the iron ore and the coal lines, and of course 1,911 operational locomotives. Our investment property size, both commercial and residential, 32.3 billion. You know that we've been out in the market. We will continue to be out in the market to dispose of non-core properties because we are in a recovery, and what we do not need, we need to make available to the rest of the country to use. So we will monetize as much as we can. Okay. The chairperson talked about the rail policy. There are several policies. As the state-owned entity Transnet, we are responsible for the implementation of government policy. There are a number of expectations from this organization that will drive change within the country and the company. So we talk about the national rail policy. I'm not going to go through all of the detail. The freight logistics roadmap you will all be aware of, approved in Cabinet in December 2023. That required from Transnet, first of all, to attract and crowd in the private sector so that we can get investment from them, capital, skills, resources, whatever it is that we need. We want to move product from road to rail, and we need to ensure that there's a complete, we need to strengthen the integration of land transport. The national road policy, the chairperson talked about the separation of the infrastructure from the operations. We've established the Transnet Rail Infrastructure Manager, and with the establishment of the Infrastructure Manager, we will then also able to provide the access to the 11 train operating companies that we announced recently. We will be going to the market with certain private sector participation transactions. I will talk to you about them in the look ahead or the look forward. Of course, the Economic Regulation and Transport Act, we await, the Minister is about to, I think, announce the board of the Transport Economic Regulator, and you can see what it is that the Economic Regulator is expected to do. Of course, the Ports Act, we are working very hard with the task team set up by the Minister on the corporatization of the Transnet National Ports Authority, and we are on track with some of in fact, with all of the initiatives. Then, of course, the Treasury government guarantee conditions. I can say that as Transnet, we are compliant for the most part. He's laughing. We are compliant. Government does not have to take anything away from us. We are working very hard to ensure that we meet the conditions of the guarantee framework agreement. So we've implemented our recovery plan. We will show you the benefits of that. We have established the infrastructure manager. We are in the process of disposing of the non-core properties. Very excited. I will speak more about it when I do the look ahead. The establishment of the rolling stock leasing company. I think that's going to be a game changer for South Africa and for Transnet. And yeah, I mean, I can't emphasize enough the crowding in of the private sector. Why are they there? Those policies, we want to modernize infrastructure, we want to improve operational efficiencies, and we are succeeding in doing just that. We are increasing capacity, and we will continue to do that. The chairperson talked about 127 billion over the next 5 years. Approximately 25 billion rand a year that we are investing in infrastructure. Of course, we want to promote sustainable practices because we are a good corporate citizen. And then we want to ensure that the growth that we are driving, that it is sustainable growth. At the end of it all, we expect all of these drivers to grow the economy. These policies, again, the impact, we talked about the introduction of new players. There are now opportunities, particularly for historically disadvantaged individuals, to make a meaningful contribution and to take part in this environment. The introduction of new players. We believe that, of course, competition will ensure that efficiency is improved and that ultimately that the performance moves up. We talk about industry investment and collaboration. Our customers have been at the forefront of this, wanting to work together with us, wanting to invest with us in this infrastructure, because when we don't work, they don't work. We only make money when we move product. So we need to ensure that the network is in the right state and standard to be able to do that. Of course, monopoly power, everybody was out making a noise. Here we are inviting the private sector, and there's a reduction in the monopoly, right? Increased regulatory oversight. Why? Because we need to be transparent. We need everybody to understand and to know what it is that we are doing. So regulatory oversight, that will increase with the Transport Economic Regulator, making sure that we are transparent and fair pricing, but of course, very important, greater accountability from all players. Where is that going to lead to? We're talking about increased rail transport efficiency, a shift from road to rail. Ultimately, we want South Africa, and the cost of logistics in South Africa, we want it to be a destination where the cost of logistics is cheaper. So this must be the destination, the place where people want to go, because we've reduced the overall logistics cost. And ultimately, of course, we want to make sure that the value chain improves in terms of efficiencies, customer services, and the choices that people make in terms of the modalities. Now, you would be familiar with this particular slide. We presented this last year, towards the end of the 23-24 financial year, when we were talking about the introduction of the recovery plan. The approach that we chose was two-pronged. We'll go into more detail, but yes, we needed to immediately stop the bleeding, immediately ensure that we optimize the day-to-day, the tactical, making sure that we are efficient. The GCOO, sorry, let's swallow. There we go. Responsible for a lot of the execution that we've seen and the improvement. And at the same time, we needed to transform this organization. We understood that as a Transnet, we cannot remain the same Transnet that we were a few years ago. We needed to change. And this is what the transformation requires of us, that we review, that we reinvent, and that we transform this organization. And then, of course, very important, aligning with the freight logistics roadmap so that we can unlock growth for the country. In terms of the business and the performance of the business, I spoke to you about this. This is basically the approach that we took, fixing and optimizing the business, making sure that we implement improvement plans, that we work with our customers, the Oil Users Forum, the coal export parties, the chrome industry, the manganese producers, working with all of them so that we can ensure optimal utilization of our network, so that we can ensure that we run volumes. Again, when we move volumes, the country grows. Okay? We don't make money if we don't move volumes, right? Transforming the business, very important. We are currently involved in a major reorganization of the business to make sure that also that we are in line with the strategy, that we are properly structured. We have separated in terms of infrastructure and operations, and yes, the teams are working quite well, and we are proceeding in terms of the move towards getting the private operators involved. But of course, we're not going to transform and not grow. Ultimately, we want this organization to grow, and at the same time, we know that when we grow, the country thrives. Okay? I love this slide. This picture tells a beautiful story, right? 2017, 2018, we are often reminded, Transnet at its peak, 226 million tons. Oops. 6-year decline to 149.5 million tons. We immediately engaged our customers, we immediately engaged our stakeholders, and we had the conversations, the robust conversations. We have to change and we have to do something. And in the first 6 months, you recall, we took the volumes to 151.7 million tons. The promise we made to the customer is you will not be worse off than you were in 22-23. And then 24-25, colleagues, 160.1 million tons. 11 million tons from where we started in 18 months. What this slide shows you is where the turnaround started, the direction that we are going, and the fact that this is a journey and we are not done yet. We've not arrived. We still have a long way to go. Okay, so now that was the rail volumes. You've seen that, going in the right direction. In the ports, slightly below prior year, 4,000 TEUs, but I can tell you, if you go into the ports now, so let's imagine, or let's go back to 2023, 21 vessels waiting outside of Pier 2. Go there today, vessels are berthing on arrival across the country. Vessels are berthing on arrival across the country, and I can tell you, as we speak now, and we will report that in 2026, we are already above prior year. Okay? So, the ports are breaking records. I worry now that I have to wait for vessels. That is my big concern, right? But we will continue to push. You will see that they are now moving 90,000 TEUs per week, and they've been doing that sustainably. Okay, they're breaking records. Port automotives, you can see that number, 4% above, 803, 908 units, fully built up units that have been moved. And then, of course, pipeline volumes, unfortunately, yes, below the target, largely because of the geopolitics. We all know what is happening. But I can tell you, for the most part, majority of the volumes that are coming into the country is being moved through that pipeline. And we continue to engage with our customers so that we can improve on those volumes. How did we do this? I will speak to you later about the delivery of the new equipment. I will show you what it is that we brought into the system. Relationships with our OEMs, it would not have been possible if we did not have that close and get together and say, how can you help us? Bump us up your order books, but we need this equipment in South Africa. Our customers have been absolutely amazing. We've opened our doors, the conversations are robust. They tell us where they feel that we are not, pulling up to that. We need to pull up our socks and we need to get this thing going. They are engaging with us, but it is all constructive engagements because everybody wants us to work. And I can tell you we are very, very appreciative of the responses that we are getting from our customers. National Logistics Crisis Committee between business and government, that has been going very well, and we see the benefits of that. I have to say, the other day, I think it was a week or so ago, we were with the president in the meeting with business. And I don't think my customer will have a problem with our quoting. So one of our customers, because it gives you the story, Andrew Kirby says, Mr. President, in 2023, we measure from the time the vessel goes into anchorage to the time that we receive our parts in the factory. Oh, he's from Toyota. Did I say that? Because it's an auto customer, and he says, we measure from the time the vessel arrives at anchorage to the time that we receive the parts in the factory. 2023, we were sitting at 21 days. Right? And he took it all the way through, and he says where we are now, under 2 days. Whoa. reversing the volume decline. We have delivered key port equipment across all of our terminals. We've established the rail infrastructure, and colleagues, everybody is working so hard. Everybody is working so hard. I mentioned the 45 locomotives that we brought into the system. Besi Mabunda sitting there as the Chief Executive of Transit Engineering. Great job, right? We talked about the rail volumes. Russell White is sitting there. We need more, Russell. Mr. Kanji from Transit Pipelines of the rail, we need more. Disposing of those non-cores, who have I missed out of the Cs that are present? I'm trying to see them. Moshe's not here, but infrastructure manager happening, and of course, Mr. Lotswalo. We are all his babies. ESG colleagues, I want to pick up on specific things. I'm not going to spend all. Triple BEE, you can see what we are spending on Triple BEE, 33.6 billion in the last year. Black-owned businesses, 19.8. Women, 12.1 billion, right? But, I mean, the chair talked about safety. And, in the midst of all of this, unfortunately, the record is not too good. We've got some work to do, colleagues. We are striving for zero harm. I want to remember, and if we can have a moment's silence, I want to remember 7 employees, those people in the trenches who, in the line of duty, lost their lives. Mr. Magwenchu, Ms. Maribani, Mr. Simalani, Ms. Nkosi, Mr. Dlamini, Mr. Mutwa, and Mr. Magwaza. 7 employees, 1 life lost is one too many. So we have a lot of work to do. As we recover, it's not going to be worthwhile if we are losing people along the way. Okay? If you can just do a moment's silence, I'd appreciate that. May their souls rest in peace. Thank you. Of course, again, when it comes to talent growth, I want to pick up on that. 254 trainees, 860 million spent. So we will continue to try and improve there. And you can see in terms of our carbon footprint, some improvements. Research and development. When you want to reinvent, you have to continue to innovate. So we will continue to spend money as well on research and development, and you can see some of the projects there. Now I know you're going to, I put the slide here because it's important, because last year, we reported that 7 billion loss. And a lot of it was because of a post-balance sheet adjustment that had to be made. Now, the only thing I want to say here, because you're going to ask me, but how did you afford to pay these people? Look. We are good negotiators. We had a judgment debt. You know when you have a judgment debt, you pay it. Okay? We did not want people to come and attach the chairs and the rail lines of Transnet. We had a judgment debt. We could have carried on and appealed and appealed and appealed, and a lot of money and more interest on this judgment debt. This judgment debt, capital together with interest, was almost 10 billion rand. We settled this matter for 5.5 billion. That's good negotiations. And I can tell you, I mean, Sandra, early hours of the morning, Saturday, we were doing this, and I can tell you that we succeeded in ending 10 years of litigation. 10 years of litigation. And now we are negotiating a new contract with the natural partners. If we did not do that, we would be sitting with a contract with all sorts of things that would not have been good for us or for government. This is what we're sitting with. New contract, new way of doing business. So now you know, we paid it. We paid it. CCMO allowed us to pay it. I'm coming to the security issues because I think it's important, right? When Nosipho presents the numbers, they're good numbers, but I need you to see it in context, right? We work very hard, everybody works very hard. Security, derailments, 7.1 million tons lost. That's why we have to improve the network. Russell still has a bit of hair, but if this continues, he's not going to have much. 7.1 million tons. Take the average per ton, Russell, revenue that you should be earning. I mean, it's a lot of money. Okay? But one for me that is particularly problematic is this one here. This will also be sorted in a way if this is sorted. 4.1 million tons lost due to cable theft. Theft and vandalism, security incidents. As much as we have improved the security incidents, I have to appeal as a country. We have to work together to stop this nonsense, forgive my language. We need to stop this, colleagues. Critical infrastructure in this country is being attacked on a daily basis. On a daily basis. It is unacceptable. We must not condone it, and we must fight to stop this. Transnet spends almost 4 billion rand on security to protect this network. Yet, we are still losing 4.5 million tons a year. If we reduce that by a third, this business is profitable immediately. Okay? That's a lot of money. Not only our money, the 1 rand that I may lose or that we lose in Transnet, our customers probably losing 10 rand. So we can see the sheer magnitude of this problem. Eskom suffers it, water suffers it, Transnet suffers it, Telkom suffers it. Everybody is suffering from theft of cable. We need to resolve this problem. But it's all not bad news, right? Because if you look at the number of incidents, you can see 23% improvement from prior year. TPL, very proud because we put the solution in place together. Sibo is able to sleep now a little bit. There were times in TPL we could not sleep. At the worst of this, in 22-23, I think it was 26 incidents in 1 month. We had a spate of, I think, 3 months without incident. This last month was without incident. So we have succeeded there, and we really want to take some of those lessons and repeat them, because security is not going to destroy this business. Well, theft and vandalism is not going to destroy us. So you can see a lot of initiatives, but really the teams have done very well in trying to get this under control, and we'll continue moving. You would have seen recently 21 people arrested trying to break into one of our depots. We arrested somebody the other day with how many reels of cabling? And we'll continue to push that, and we'll continue to work with the police and with the NPA and with all of the authorities to stop this. I'm going to hand over to the GCFO, who's going to give you what you've actually came here to hear.
Good morning. Firstly, thanks to Michelle and the chair for those opening and presentation. Appreciate it. And thanks to everyone for making the time to join us for our results presentation. It's a year since we've been here. Actually, it's a year since I've been here, a year and a bit. So I think this year we have much more pleasing results to present, for which we are very grateful to everyone at Transnet across the board. And we're also grateful to our customers and all those that support us, suppliers, investors, bankers, everybody. It's a collective effort. So I'm going to start off just making this thing to work. So we have heard from both Michelle and the chair that our volumes improved drastically in the last financial year. I'd like to round it up to 10 million tons improvement in a year, which is a clear indication that our strategy and our recovery plan is working. Because rail constitutes about 50% of the business, we use rail as a measure of progress for Transnet. But it's not to say that the work that is done in the ports business and in the pipelines business and even properties doesn't matter. It does matter. So when you see growth in volumes, then that is definitely going to show up in our revenue. So our revenue for the year grew by some 7.8% year on year. And I was saying one of these days we're going to breach the 100 billion rand mark one of these days. So 82.7 billion rand. Now, with that, and we have a lovely story. EBITDA performance in the year was 39.4% growth. I like to call it 40%. So that for us, we're very proud of that. And that really is because of all the hard-working people across Transnet, and specifically in operations, to make sure that we move the volumes for our customers. Now, without making light of the fact that we have made a loss of 1.9 billion rand in 2025 financial year. But it is very important to remember that this number last year was a loss of a whopping 7.3 billion rand. 1.9 billion rand loss, vis-a-vis 7.3 billion loss in the prior year. That is 74% improvement. Okay, then I'm going to touch very briefly on key aspects of this. So I have already spoken to the growth driven by the volumes, so that's 7.8%. I have spoken to EBITDA of 10.6 billion rand. That is a huge improvement in 1 year. But now between revenue and EBITDA, there's operating costs. Again, from an operating cost point of view, we have some 5% reduction overall in operating costs, which is also a significant improvement. I have spoken to the 74% growth on net loss. We will have a net profit one of these days. That is our aspiration as a company. But the biggest news of this, because this drives and leads our growth into the future, is the investment that we have made in CAPEX. That is in our infrastructure, that is in the equipment that we use to drive and move the volumes and commodities for our customers. That's a 44.2% improvement in 1 year. Now, last year, our CAPEX investment was 17 billion rand. So that has grown by some 7 billion rand, 24% growth. That we do believe will help Transnet improve and increase the volumes that we raid and the volumes that we move in our ports and network as well into the future. So that is our investment in our future. Without just going too much on this, the point I made earlier that we use rail as a proxy for performance in Transnet. So 54% of our revenue is driven by the rail business. So that is the work in TFR, Russell, TE, Bessie. Moshe was not in these numbers last year, but he will be in these numbers into the future. And then the ports business contributes some 35% to revenue, so it's not small. Even TPL, as the 10% of that. But if you look at where we're making money as a business, you see 47% of our profit comes from the ports business and 10% comes from the pipeline business. So those are very, very big businesses for us. Just maybe then the abridged income statement. I will not repeat what I've said already. Revenue, I've spoken to. Net OPEX, I've spoken to. EBITDA, that 40% growth, I've spoken to. Then between EBITDA and the loss situation, I think both Michelle and the chair did make mention of the level of debt that we carry as Transnet. So if for argument purposes we said we did not owe anyone any money, we would have at least declared a profit of 15 billion rand. But that is not the case, so we cannot wish this away. And we're grateful to our lenders and investors. So all that money goes to the likes of Zen and Co. And thanks for that. Now, if one then looks at the ratios, if you look at EBITDA margin, I hope you forgive me, Zen. If you look at EBITDA margin, last year was 28.6%. It's grown by almost 10% in 1 year as a result of the improvements, more volumes, more revenue, better cost management, etc. The cash interest cover, which is contracted at 2 times, maximum 2.5 times. We finished at 1.8 times. We are also grateful to those that give us money for allowing us to waive their rights to calling on the loans, because technically it would have been an event of default, but we are grateful for the support. But for accounting purposes, what we do then, in our balance sheet, we will then reclassify those into short-term liabilities, but they not really short-term liabilities. Then gearing increased from 46.2 to 49.6. Now you would appreciate that if we're investing more money into our capex, then that money needs to come from somewhere, and the bulk of that actually came from our liabilities. So we're grateful for that. Net debt to EBITDA, debt did not reduce, but EBITDA grew. So as a result, you see that 5.4% improved to 4.3%. It's still not where we'd like it to be. Our peers look at 3%, but we're moving in the right direction. And then lastly, I think repeating this, 17 billion to 24 billion, which I have mentioned earlier. This is for us very significant and builds for us going forward. Then this is just very briefly, I will touch on net operating expenditure and what drove OPEX for us in the financial year. So you see personnel costs account for 56% of our cost base. And then next to that will be energy costs. This is what we pay to ESCOM and the fuel companies to move products. And then security, Michelle did speak to security, but I do believe this is an investment that is required and necessary, unfortunately, with the current levels of crime that we have in the country and across our network. So then that reconciles the 2024 numbers. And then the big news obviously was the whole issue around the settlements with the third parties that Michelle did speak to earlier. If I move on, where the money came from, the reduction in the loss. The reduction in the loss came from three important areas. One is revenue, which is really what we would like to see always and going forward. And then the second one was the reduction in OPEX. The rest is really rats and mice. I mean, you see the additional net financing costs. I'm not picking up on anyone. As a result of the increase in what we have in the loan book. Moving along. The financial position or the old balance sheet. So with the investment in the additional investment in the asset base, you will see that our asset base grew from 336 billion to 339. So it may seem like a small increase, but I'll show why that is the case. But well, let me stop there. And then one looks at liabilities. So you need to look at these together to some extent, but let me stick with the long-term liabilities from 135 to 140 billion rand in 1 year. So those are very significant numbers and explain why we will have such growth in your gearing as well as in gearing specifically and in finance costs. Beg your pardon. Then, from a borrowings point of view, and I've been happy on borrowings, you'll see that we started the year with 135.37, and it's grown to 144. Almost you can tie this almost exactly to the capex spend of 7 billion. So it grew our level of debt by 7 billion. So it's not gone into salaries; it's gone into investment in our asset base. Then the bad news of this presentation is obviously the downgrades by the two rating agencies, Moody's and S&P. But the good news is that we got support from the affected lenders with regard to a potential event of default. And we also got additional support from the government in terms of government guarantees. Okay. Then I'm going to come back then to the investment in our capex as well as in our asset base. So we started the year off with 294, beg your pardon, 295. And there's the capex growth. There's some levels of devaluation in the year, and depreciation is par for the course. Therefore, the growth to 299. And this, it is also important to note that the bulk of that goes into the rail business. proportionately to their contribution to the revenue in the business. And the next big portion goes into the ports business, and then pipelines and the rest of the business. And it is also important to note that 85% is obviously to replace, and we talk a lot about aging infrastructure and the like. So this is the stuff that we are doing to make sure that we renew and refresh our infrastructure. In conclusion, volumes grew, EBITDA grew 39.4%, CAPEX grew 44%. Yeah, I'm not going to mention the other number that got me into trouble. Thank you very much again, and thanks to the colleagues and everyone that's attended today. I'm going to hand over back to Michelle. Thanks, Michelle.
Thank you, Nosipho. So, where do we go to from here? What are we doing? Also, I'm not going to go through too much detail, but I'll pick up, I think, the salient points. I want to re-emphasize this particular slide. This is the slide that we utilize when we try to explain to everybody about our recovery plan and what it entails. You'll see operational execution is what we are all focused on. Ensuring that we have uninterrupted movement of trains, ensuring that in the ports that they operate efficiently. Everything that we do, we all work for SONI. Okay? We all work for the operations, right? And then the people counts. So we all here, it's about operational execution, right? It's about equipment that we have to ensure is in the right state, is properly maintained. People at the heart of it all, very important, because without them, trains don't move, shore-to-shore cranes can't move, RTGs don't move. Procurement, a lot of work that we're doing in procurement. Vule is sitting here, we are digitizing, we are training our people to ensure that we have better processes. Maintenance, we've spoken about. BSC supporting Russell, also probably going to be train operating companies, ensuring that we maintain, of course, our funders. We're looking forward to the renegotiations of our agreements with you, because we do have guarantees now. So those guarantees are not there to increase the loan book. It is also there to start negotiating on the cost of these agreements, right? So don't worry, we are coming. Because we want to start paying back. It's very important. We have to start paying back, colleagues. We talked about my friend Pandalani is on leave, but digital transformation working hand in hand with the operations and with the procurement people, and again, not at the expense of safety. Okay, so the movement towards zero harm, very important, right? So this, as much as the recovery plan, the 18-month recovery plan, in a sense, has been concluded, we will continue to utilize this as the pillar that we will work on, right? Together with the transformation, etc., of this business. R4G, Dr. Shaw, reinvent for growth. That is the Transnet strategy. We have rolled this out to our divisions. We will be engaging with all of our stakeholders to explain to them what this reinvent for growth strategy means. But you can see largely the reform objectives. Operational efficiency will always be there, colleagues. We will enhance financial stability by strengthening the health of this business financially. Public-private partnerships, key to what we do as we move forward, and in the growth of the capacity. Now, Transnet is currently targeting 180 million tons. We know that the country target, the South African country target, is 250 million tons. Okay? We need to fill that gap as a country. So my push is really for Russell and his team and everyone that supports him to meet and exceed the 180 million tons. And we need the private train operators to make their contribution as we move forward to 29-30 to move 250 million tons. Okay? That's what we need to grow this economy. That's what we need to create the jobs that this economy needs. Ports, well, reducing congestion, we'll keep it where it is. I like a pipeline of vessels, solid, waiting to be worked. So we will continue to push that our customers bring these volumes to the ports. Of course, we are working hard to ensure that our people meet the targets in terms of the handling of these containers. And then, of course, on the rail side, we've seen the structural changes. We are working very hard to upgrade the infrastructure. We've conducted independent technical assessments on the iron ore line. We've done it on the coal line. We're going to be doing it on the container line and the other lines that require those independent technical assessments. It gives us an indication of what it is that we do now and what it is that we need to do over the next few years. I can tell you, we already see, when I looked at the numbers this morning, 3.7 million tons in the week, Russell. Excellent performance. But I need 4. I know we're in the World Cup, but I'm saying if I get 4, then we're really in the World Cup. Okay. Of course, all of our stakeholders, I'm going to pick on a few. Our customers want consistent performance. They want us to perform, they want improved performance, they want their cargo on time. You know, so when Toyota says, I'm only waiting under 2 days, we're getting there, right? Consistent rail capacity, proactively communicating with our customers when we know things are going wrong. We have to allow our customers to be able to anticipate and to be able to do things when we see something is going wrong. It doesn't help us when we do that after the fact. So a lot of work there. Of course, the PSP transactions are going to more detail there. Shareholder and government, we are very grateful for the support, but yet there's still continued work that we need to do as we implement the policies of the 7th administration. Our investors, as I've said, it's interesting that then, I've seen some of the other colleagues here. The investors now know what it means to run trains. They know gross train moves per hour. They know ship working hour. They know. Why? Because we've been teaching them. We've been going there, we've been spending a lot of time. And why have we been doing that? Because you are going to be funding private operators as well, right? Our customers are your customers. And when our customers say they're not making money, they go and tell the bank. So the bank then comes to us. So we've been teaching them what all of these things mean. And I think as I sit with them, they start telling me things now. So great. But employees and the unions, colleagues, we did get some flack because of our wage negotiation this past year. But I can tell you, we've negotiated a further 3 years of peace. Some of you would have experienced the impact of the last strike in Transnet. We were able to negotiate an agreement with no strike. We were told that when there was a strike, the country was losing $1 billion a day. So I think the work that everybody has done, Tumi and the team, has been, I mean, needs to be applauded because we were able to negotiate another 3-year agreement peacefully. Yes, of course, we talked about the lenders and the financiers, so let me go. Again, to re-emphasize or to reiterate the strategic priorities as we move into 25-26, improved execution, financial sustainability, PSPs, nothing at the cost of safety, digital transformation, a lot of work that we're doing in terms of the culture in our organization, making sure that people are accountable, making sure that people understand the impact that they have being a part of Transnet. This asset is a public asset. We have been entrusted with this asset. And it is through the use of this asset that we will be able to touch the lives of ordinary South Africans in everything that we do. And our employees need to understand that culture. That's what we want in this organization. Okay? Procurement reform we've discussed, and of course, security, we will fight that battle and we will succeed. So, part of the good news, what have we done? Right? It's not going forward, but it will show you in terms of what is still coming. So as you see, the renewal of the fleet in the container terminals. You recall in 23-24, we said to you, the people do not have tools, the machines are breaking down. What have we done? That 24 billion that we're talking about, 16 RTGs, Pier 1. 9 of them already in operation, the rest on its way. It's there, we're busy assembling it. 23 haulers delivered at Pier 1, 40 trailers delivered at Pier 1, reach stacker 1, empty handler delivered. Pier 2, very exciting, 4 new ship-to-shore cranes that we are in the process of assembling as we speak. They will go to the South Key, yeah. 2 of them I think are being assembled. We will see them be commissioned, the first 2 in October, the other 2 in November. So before we go on Christmas leave this year, 2025, 4 new cranes will be standing, they'll be red, and they'll be standing up there in Durban. We've launched the 20 saddle carriers, you can see 40 haulers, 40 trailers, reach stackers, empty handlers, Durban MPT, 4 reach stackers, NCT, 50 haulers, 50 trailers delivered. I'm very proud of this one, PECT, that's where I started my career in Transnet many years ago. We've just given them a new ship-to-shore crane. And of course, Cape Town, we've already assembled the first 9, I think. We are busy with the second, 28 RTGs that we will be launching in Cape Town this year. We will be there on the 17th of September to launch these RTGs. 47 haulers, 47 trailers, you can see. Reach stackers, Cape Town MPT, reach stackers, Richards Bay haulers, 17 delivered. 40% in progress, 60% delivered. Just last year. Okay. What is in progress? You can see. Straddles, Pier 2, 16. Cape Town, another 4 because of the wind, right? PE, 12 to support the ship-to-shore crane we've just given them. And you can see mobile harbor cranes, terminal trucks, etc. This is going to be how we will do this going forward. These things will be delivered in the next year as well, right? All that we ask then is, again, the conversation that we had with our Labour parties this morning was being in the ears of our members, of our employees. We need them to utilize this equipment optimally and safely. Private sector participation transaction update. Let me give you an update here. You recall the minister's RFI process that was run. We are spending time going through the responses of those RFIs. Remember, the intention with that was to properly frame the problem or the RFPs that as Transnet we will go to market with. You can see the first one, I think that is most ready for us right now, Richards Bay. Before the end of this year, we will go to market for a partner in the Richards Bay dry bulk terminal. We need to modernize this terminal. What will happen here if we get this right? Again, funders, there will be engagements. If we get this right, we will be able to expand the capacity in Richards Bay from 18.5 million tons to 26.9 million tons. That is big. The Richards Bay dry bulk terminal will become the leading bulk export terminal on the South African coast. Okay. Muga Manganese Export Corridor PSP, we think we will go to market with this one. I know it says Q4 here, but this will be, yeah, Q4. That will be towards the January to March of 2026. We will go to market. We have to go to market. The terminal in PE needs to be decommissioned. It's at its end. We will go to market. This will be a big one together with the rail, and there we want to find also partners for 25-year corridor-wide PSP. The container corridor PSP, we will issue stage 1 of the RFP, also Q1 next year. We're busy doing work here. That will be also a rail operations concession for 25 years. And then again, one that we are very excited about, the LeaseCo. You know that the LeaseCo, we've been to market. We are busy now with the evaluation, and then we'll go out on the stage 2 RFP to those shortlisted bidders. Here, we have quite a large fleet of underutilized and some not being utilized at all of rolling stock, both locomotives and wagons. We need to monetize that, and we will be also supporting these private train operators, because we know if they were to go and buy new, not only is it very expensive, it will take a long time before they are able to enter this network. So we have been approached, and we are engaged in conversations. It's being run by Lisa over there from Business Development. They are engaging with these private train operators, but also TFR, if they require rolling stock that they can release from the leasing company to be able to enable use on the network. So we're very excited. We believe that this will be a game changer. We will be going to market, because there we need a partner that can come in with the necessary capital, some skills in leasing. We need to refurbish this equipment so that we can have them making a contribution ultimately to the 250 million tons. So very excited. And by the way, colleagues, we are not tied to a majority share in that business. You come with the money, we negotiate equity. Okay? So, let me go back and conclude. So colleagues, you've now heard, right? The strategy is working. It's working. Transnet's Reinvent for Growth strategy is firmly in place as the company's North Star. It's embedding operational discipline, customer focus, and commercial sustainability across all our divisions. And it provides a structural platform for recovery and long-term growth. The recovery is real. The recovery plan is delivering measurable results. You've heard it. Revenue is up 7.8%. Net losses have been cut by 74%, and operational improvements are stabilizing volumes. These outcomes show that the turnaround is not abstract, but tangible, with visible progress in efficiency, cost control, and customer solutions. The foundation for a sustainable future is being built. improved financial performance, disciplined capital management, and the government guarantee facility together provide the stability and resources needed for Transnet to modernize infrastructure, attract private investment, and strengthen competitiveness, ensuring the turnaround is sustainable. Now, before I go to my concluding remarks, colleagues, because I know you're going to, the journalists in the room are going to talk a lot about the guarantee. There's no bailout here. Government has given us the authority to go and borrow more money. We have not been given a cent from government. We will go to the markets, we will engage our lenders, and we will ask them to continue to support us where we need them, and we will negotiate agreements that work for our organization, and we will plow that back into our business. Because ultimately, we need this business to be profitable, and we need this business to now to start contributing, in fact, to the government. Okay? So in conclusion, again, Transnet's recovery is more than a company story. It is a signal that our economy is starting to turn the corner by stabilizing freight volumes, modernizing ports, and opening the market to third-party participants. We are positioning South Africa to compete globally and seize the opportunity of hosting the G20. Our success is directly tied to the country's success. Transnet's recovery is South Africa's growth. The strategy is working, the recovery is real, and the future is sustainable. When Transnet works, everybody in the room, South Africa thrives.
Thank you very much, Michelle, Masiko, and Chairperson for your presentations. The message from the executives is clear. The strategy is working, the recovery is real, and we're on track for even better performance moving ahead. No pressure, Group COO. We're now going to open up for questions. We'll start in the room by show of hands. If I can see who has any questions for the executives. Okay, I'll take the center one here. Can we get the roving mics? Timba, if you can take it to the lady in the second row, please. If I can ask you to indicate your name and the organization you represent. Thank you.
I am Sfundo Parakozo from Thomson Reuters. I first of all just want to congratulate Transnet for significantly narrowing the 3-year loss. I just wanted to find out if you could maybe give us an estimate of the next financial year's performance, because I think you estimated 1 billion rand profitability for this year, so I wonder if you could maybe give us an indication of what you expect for the next year. And the next question, apologies if it's been addressed, would it be possible to maybe get a timeline on when you plan to give private rail operators access to the network? Thank you.
Do we have any more questions in the room? Ray?
Thanks, Ayanda. It's Ray Mahlaka here from Financial Mail. Just an update on the dispute, the ongoing dispute with CRRC. Yes, it's Ray Mahlaka from Financial Mail. Just an update on the ongoing dispute with the CRRC on the locomotives. Thanks.
Thanks. Let's take one last question in the room. The gentleman at the back.
Thank you. My name is Ntumba Kataba from the French Development Agency. With respect to the security and cable theft, they had mentioned on the slide that you are pursuing outcome-based security solutions. If you can please elaborate on what that means, please. Thank you.
Right to the back. Go ahead.
sorry, Ed Stoddard with the network. I was just wondering, I was looking out through the results on the website, the integrated report, and apologies if I don't see it. But on the security front, I'm just wondering, the tonnage lost from derailments and copper cable theft, this financial, I mean the 2025 financial year, how does that compare to the previous financial year? Because we did have a 23% decline in theft incidents. And I was just wondering, on the government guarantee, can you just remind me about how much that is, how much you're going to be allowed to borrow? Thanks.
Thanks, Ed. And then for now, we've got two questions online from Carol Payton. I'm going to read them out. To the Group CEO, Ms. Phillips, you put a very positive spin on the results, but you missed targets in rail freight and in ports and TEUs moved. When do you see lift-off happening for Transnet? Her second question, now that you have started the process of getting private train operating companies onto the line, what is the plan for fixing the network before those train companies start operating? What guarantees will you give them?
Okay, I think I'll do it from here. So let me start with Carol. So good questions again. The recovery, as I've indicated, is a journey and a process. It's not an event. We understand that targets have not been met. And we also understand that there's still a lot of work to be done, as I've indicated. So, I mean, yes, obviously, if the targets were met, we would be profitable now. And the question then again about when do we see this business being profitable? You know, last year we said $1 billion because I think we were quite ambitious about what we were doing, and we believe that we would meet I think it was your promise, GCFO. But I mean, I think, colleagues, the truth of the matter is that I think that if of course, if everything worked 100%, I certainly believe that we would have been in a profitable space in this year. It didn't happen. But I think we have to celebrate the improvement that has been achieved. 74% in this business is no small feat. The fact that we've been able to do it is something that we need to celebrate. And I think that, you know, it could have been a lot worse if we didn't have the dedicated people working very hard to be able to do that. So, look, the truth is I'm not putting any positive spin on anything. The numbers speak for itself. And the numbers happen to be positive. The question also then, Carol, about the train operating companies. The question is, when do we plan to fix the network before those train companies? So, this business, I can tell you now, and this is the difficulty, right? Russell runs his trains on this network. When he derails because of theft and vandalism, he's got nobody to sue. He runs his trains at own risk. Now, we know that this network needs to get to the right standard because we don't want private trains to derail. I mentioned the independent technical assessment that we did together with our customers on the ore line. I mentioned the independent technical assessments that we did on the coal line. We are going to be doing one on the container corridor, and I think there's also a part of the North Corridor that is currently underway. The reason we do that is so that we can identify the low-hanging fruits, the things that we can do immediately and that we can fix, the things that we can do over the medium term and the things that we can do over the long term. Now you recall, when we first introduced the recovery plan, we also discussed with the market the fact that there was this large backlog in maintenance. So what has Solly Laswalo and his team been doing? With every annual shut, they've been fixing and they've been repairing and they've been rehabilitating. Now, wouldn't it be great if I had the luxury of shutting off the complete rail network to be able to fix it? We do not have that. We have to fix between trains. We have to fix during annual shuts. So we have 10 days per corridor during a year to do what we need to do. And that's why everybody works together to be able to do that. We want to be able to do as much as we can so that when private operators get onto this network, we do not run the danger of those trains derailing. But you will enter the network at your risk. We are not subsidized by government bodies. So we will fix the network, but you will enter it. We will help you to get in here. We will try to make sure security, or not security, theft and vandalism, we are trying hard to grab control over it, right? Weather incidents, we cannot control, but we are trying very hard to minimize and to mitigate the impact of these uncontrollable factors on the network, okay? The timeline in terms of the introduction of private operators into this network, we've been told by, and they range between 12 months to 36 months, those 11. We are now in the space of negotiating with those 11. Now, remember, if you're going to be buying new equipment, from the time that you've gone to your banker and arranged your funding, and you then place your order, it's probably going to take you 2 years to then get new equipment into the system. That's why we are introducing the leasing company, because we want to try and make that, to fast track that. But right now, the timelines that we are hearing from these private operators is between 12 and 36 months. Of course, we have a target as well. They've indicated to us that they can move 20 million tons. The sooner we get the 20 million tons in the system moving, the better we all do. Okay? Then there was a question on, I'm going to leave CRRC for last. Then there was a question on outcomes-based security. What does that mean? So in the past, we would say, or Transnet would say to the private security companies who help us to look after this network, we would say to them, we want so many helicopters, so many drones, we want so many guards, etc. So when something goes wrong, the service provider can now say to you, but I did what you said to do and it's not good enough. And therefore, I need more. Now what we've done, we've said to the private security companies, this is what we need you to do. So here's a baseline. But you go and you put whatever you have to put into the system. What we need is a reduction in the incidents. If you don't reduce, we will penalize you. If you do better, there's a reward. So that is how we're doing it. It's based on the outcome. We don't want people to be willy-nilly arresting people and then it looks like things are good, but yet the damage to the system goes in the wrong direction. So that's really what the outcomes base is intended to deliver. Then there was a question about the comparison between last year and the 2025-26 year to date. Do we have those numbers, Russell? I think there's a reduction. In fact, it has been reduced. 21% thus far. Okay, so it's getting better. Then the question about there was a question about the government guarantee. What was the question?
How much?
Oh, how much was it? So we had the 47 billion originally, and then it is a 99.6 billion in addition. So we added up, is it 147? What is it? Run about there. That's the total guarantees now. I think we've answered all the questions. Oh, CRRC. CRRC, the impasse with CRRC has not necessarily moved. We are still at an impasse. But what we have succeeded in doing thus far, you would have read in the papers, is that we have an edict preventing alienation of parts that we are aware of, and we continue to go to court to now try and resolve somehow. What we have done as a mitigation is, we are contracting with a stepping OEM to try and do some of the work that would have really should have been done by the CRRC. But the point with CRRC is, you know, and we've said this before, the numbers that we are presenting to you are numbers that we've said we do not want to put in a number that we cannot deliver because we are dependent on CRRC, right? We don't want to come here and say, oh, it's because of the Chinese locomotives that we've not been able to meet our targets. We are saying we push with what we have. If the impasse with CRRC is resolved, it is a, what is it? I don't want to say a steroid or an injection. It's an oomph. It's an oomph, a shot in the arm. Thank you, Chief. It is a shot in the arm that should give us, more. Because there's, I think, a total of 99. Is that the number? 99 locomotives, Sabra, that we have not received. But by the way, for which we borrowed money and for which we are paying. Okay, thank you.
Michelle, can I just ask, this impasse that you just referred to, does the same apply to the ICTSI matter?
Okay, thanks, Eugene.
Sorry.
Chair. ICTSI matter is, in fact, the ICTSI matter is not an impasse. The ICTSI matter, which is the DCT Tier 2 PSP colleagues, is a matter that is in the court. We are awaiting the court's judgment. So we've tried, we engaged with the two parties, we attempted to settle the matter out of court. Right now, I don't want to get into trouble here, but I'm going to say it. I have a serious challenge when, as South Africans, we fight in South African courts with foreign entities about South African assets. But it is what it is, and now we are in the courts, and the matter has been heard. Finally, we tried to settle it with the parties out of court. We were not successful, and that's why we ended up in the court. Both parties made their arguments, we made our arguments, and now we wait for the judge to make his judgment. We were expecting a judgment some months back, but the judgment is reserved, and we have to respect the court process. Then we'll take it from there, Eugene. Again, if the matter goes in our favor, this business is profitable immediately. We said it was a 21% improvement.
We're going to take the last round of questions. I've got one from Carol online. I'm going to read it. The minister spoke recently of finding a legal mechanism for customers, mining companies in brackets, to invest in the network to fix it in the interim before concessioning is in place. Is that still part of the plan? And then just to check if there are any more questions in the room. Suren and Ray. The lady in front. Can we get the mic, please? Okay, go ahead, Suren.
Thank you. Suren from MoneyWeb. Michelle, if you can give us an update, probably in the release, but where is the Transnet debt standing at currently? And you talked about paying down debt now that you have this much more government guarantees. Do you have a target of how much you need to or would like to pay down? Perhaps this year you want to raise that. And I know you say it's not a government bailout, but essentially the government is allocating a guarantee. They can't spend that money. The Treasury needs to allocate it for that period. Maybe a little bit on capex as well, in terms of while it is a jump to around 25 billion a year, is that sufficient? Because I think it was Michelle, you said that, and the chair, the 127 billion over 5 years is largely for maintenance. It's not necessarily future-focused capex, and obviously bringing the private sector is also going to play in with like major projects that are coming up.
It's Remy again from Financial Mail. I think my question is more targeted to the CFO. the debt issue. I think the debt is sitting at about 144 billion. If more borrowings aren't to be expected to fund capital infrastructure and roll out money on infrastructure projects, how far can the debt levels go? Because already at 144 billion rand, the debt is quite substantial, and also some of the lenders are worried about the cash interest cover. Transnet hasn't reached a cash interest cover of between 2 times and 2.5 in a very, very long time. I think we're sitting at 1.9 times currently. So what is the timeline to get to that cash interest cover of between 2 and 2.5 times? Thanks.
Thank you so much. Tanu Jan from Alwani Capital. Just a question around the capex. So bulk of that is going to replacement and maintenance. In terms of the strategy, which is really meant for growth, the portion that is allocated for expansionary capex, how do you need that in order to achieve the strategy?
Any more questions? Ed?
Sorry, but I'm sure my first question was addressed. I was just wondering the losses from derailments and copper cable theft. How this year compares to last year, especially given the fact that there was a decrease in the number of incidents. Thanks.
21%. To date, there is a 21% improvement.
21%.
Yeah.
Thank you.
Obviously, the year is not yet complete. 25, 26. Yeah.
This is the last round of questions. So I see. Go ahead, please. This is the mic coming to you.
Thank you very much. It's Zen from South Bank, and thank you to the chair, CFO, and Michelle. You can see there is progress, and yes, you speak on behalf of the country when you talk about Transnet. I just want to ask one question, and it's really around your locomotives. I know that CRRC, it's a different conversation with the Chinese, but you also had the 2 OEMs that were supplying diesel and electrical. Now, did they all give all the locomotives? Did you receive all the locomotives from GE or Webtech Transportation, and as well as Bombardier also? I just want to get the clarity, and what does it mean for Transnet now? And if they are picking up or stepping in on the CRRC Chinese piece, what are the timelines, and where do you see, when you look at your forecast, where do you see Transnet land, including the improved performance? Thanks.
Okay, I'm going to try and answer it, and then Merciful, and take over the financial one. So, Zane, let me start with you. So, BT Alstom, with the delivery of the 43, and then there's another number now. What's that last number? 67?
What is that?
The new ones, yeah, that they're building now? 67. Then they will complete their delivery as part of the requirement of 1064, right? Webtech is complete, so that's done. And then, of course, we've got the 99 that was outstanding from CRRC. Then, let me know. Oh, Carol, the question about Carol about the legal mechanism in terms of allowing customers in the short term. So we have been busy together with my team as well as the Operations Budingela team, working on a policy that will allow us in our revenue generating agreements to provide for customers stepping in certain circumstances outside of the supply chain management or the procurement processes. So we feel that when we are moving a commodity on behalf of customers and something goes wrong, if our customer has the means of very quickly supporting us, whether it be through an investment or through money or through skills or resources, we should be able to tap into that. And not necessarily have to go to the market, through the procurement process. We think that there has to be a way for customers to be able to step in, because ultimately it is about the movement of the customer's volumes. So we've been working on that policy. We need it to be a revenue generation initiative, not a procurement activity. It is a revenue generation initiative. It is a means to mitigate this revenue loss, and therefore we believe that customers should be allowed to step in those circumstances and use their processes to be able to support us. So we've been quite busy with that policy. I think we are almost at the final draft of that. We are just awaiting the feedback from the lawyers on it, because I don't want to get into trouble. Next year you'll say to me, I did something wrong or whatever. So we're waiting for the lawyers to say to us, all is in order. Once all is in order, the intention is then to get the board together very quickly so that we can get approval for that policy. So the policy will need to go through our governance processes, and once it's approved, then we're hoping that we can implement that policy. What we have included as part of our supply chain management policy, or our procurement policy as you would know it, is the collaboration agreement with customers that then allows customers to step in matters in emergency or urgency situations. So that is already part of our procurement policy. What we're seeking to do here is to have a policy in place that specifically speaks to customer agreements and revenue generation agreements. So I'm hoping that Carol is answered now. Capital spend, why 25 billion? Is that enough? We did an exercise by going back and looking at what we are capable of spending in any particular year. It's of no use for us to go and borrow money that we cannot spend. So we looked at the rate at which we are able to spend this capex. And yes, I can tell you, robust engagements. Some of the ODs were not very happy with us, but we said your performance shows 25 billion seems to be the sweet spot, and let's stick to the 25 billion. If you can show us that you can spend more, we will deal with it with our processes allow us to do unplanned capex, but the number is 25 because that is a number that I think we are capable of spending. Okay, and you can see we've now given you just under 25 billion in this financial year. So I think that the 25 number for now is the right number. But I think as the skills improve, as our processes improve, we may increase that number because we do have a backlog that we need to deal with. I think those are all mine.
Thanks, Michelle. Just to pick up on that, on the CAPEX, I think the other point that is important to note is one, affordability, that is cash flowing from operations, as well as the acceptable growth in debt that we be able to create capacity for the CAPEX. The second thing is the question around CIC. It is correct that we have not met our CIC at least for a few reporting periods. Our aspiration for the current financial year was to at least make 2.1 and satisfy the 2 times lenders. We, in that regard, actually negotiated with many of our lenders early this year when we were negotiating for waivers. So we do have a significant number of those lenders the headway for March 2025, also waiving for March 2026. So I think that does attempt to answer that question. Then with regard to the loan book, so we do believe that our loan book will peak, just need to run through the numbers, for 2020, this current financial year. So it will peak, it will still grow, so we're still in a net borrowing position. But over the next few years, up to 2030, our plan is to reduce our level of debt from upwards of 156 billion to around 107 billion. Obviously, that's the aspiration, all things being equal. We're moving volumes, we're generating sufficient cash from operations. But what is also critical and a major contributor to this is the success of the PSP transactions and the timing of those transactions, because that will unlock a lot of equity back into Transnet. So with all of that happening, the disposal of properties as well also come into the mix. And we do expect that we will be under 110 billion rand by 2030.
Just in terms of the current debt level, because
147.
Yeah, it is in today's presentation. Yeah, 144785.
Yeah. So maybe to add, only the French, so they give me answers. So the debt reduction over the corporate plan period, we are looking at reducing it by about, the corporate plan period is 5 years, so we're looking at about 33 billion over that period. The anticipation is that, hopefully, and the aspiration is that we will get to that 2.5 CIC by 27-28. And then I'm also advised that the government guarantees is a contingent, the accountants know better, is a contingent liability and not a fiscal allocation.
Just before the chair comes up to make concluding remarks, he did ask me to be a bit more lenient and take another round of questions if there are any. I don't see any online. I'm wondering if there's anything in the room. Okay, go ahead.
This is for the CFO. I'm Anastasia from Jakarta Reform News. You spoke about the net loss improvement by 74%. If you can just tell us what were the key drivers of that turnaround, and do you believe this trajectory is sustainable? And then with the revenue up by 7.8% and expenses down nearly 5%, how confident are you that this level of cost discipline can be maintained going forward? And on the investment strategy, you allocated 127.7 billion in capital investment over the next 5 years. Which area of port and rail infrastructure are being prioritized, and how will this impact operational efficiencies? Thank you.
Any more hands in the room? We've got one hand online. Adi, if you can pose your question. If you're speaking, we can't hear. Maybe it's better if you type it in the chat. In the meantime, maybe let's take responses to
Sorry.
Oh, okay, here we go.
Yes. Good morning and thank you for this update and congratulations for the results. This is Ali Dalomal from Bank of America. I have just a few questions. The first one is in regards of your funding plans for the next 2 years. I understand that around in excess of 40 billion of the guarantees will be used for the next 2 years. So just wondering how much you are expecting to raise for this year and next year, and what will be the sources? Will you just focus on on local issuance, DFI lending, or will you consider potentially maybe a guaranteed Eurobond on the Eurobond market? That would be great to hear. And then my second question is just about the non-core asset disposals. I mean, can you give us a bit more details about the timeline there, and also about the quantum? How much do you aim to get out of these non-core assets? I presume these are essentially real estate assets, but maybe you can give us more details. Thank you.
So maybe on the real estate one, I think maybe for Andre, if you can repeat that first question. But on the real estate, so you note that one of the government guarantee conditions that on the 47 billion, and it still remains in the framework agreement, is that Transnet disposes of all non-core properties. We are sitting with quite a big residential portfolio. I think I pay over 3,700 properties. 5,000, oh, it's grown. 5,300 residential properties. And then there are other also commercial properties but may not be in use, or we do not require their use going forward. But also, colleagues, what is important is that, you heard the contribution of TFR to our income statement. We have to focus on port and rail and the movement of goods. We cannot be sitting with properties that we have no use for. And therefore, we need to, because it costs us to maintain those properties, we need to be prudent, and therefore we will go to market, and we are in the market to dispose of whatever we do not need. Everything that is non-core to our business, we will dispose of.
Andre Pillay, our group treasurer, was
So just on the funding, for the next 2 years, if I understood the question correctly, our funding requirement is around 46 billion. So for this year, we need to raise 30 billion, for which we've already raised 19 billion, and next year's requirement is about 10 billion. There was also a question on the euro market. I think it's quite clear from the responses, both or the comments from both Michelle and Lucipo, that cost reduction in the cost of funding is quite an important issue. So we will only access those markets if there's no debt or liquidity in the local markets. What we're currently experiencing is sufficient debt in the local markets. I mean, you've probably seen we've raised 15 billion a couple of weeks ago. So there's sufficient debt in the rand market. So I think we will access the dollar markets on, let's call it, an opportunistic basis. Thank you.
Just to indicate that the executives will be available after this to take any further questions you may have. I don't see any further hands, so I think we can move towards.
So the PSP transactions will be pursued in line with, I think, the comments that Michelle made on the priorities that we have around PSPs. And there we will also decide how do we deal with those PSP transactions. Is it an equity transaction, a combination, blended financing? I think as we execute that, we will decide.
Thanks, Andre. And just before the chair comes up, there's a short video that we'd like to play. I think it's about 2 minutes, if not less.
For over a century, we have been the backbone of this nation, connecting producers to markets. Across thousands of kilometers of railway track, from concept to completion, we manufacture and maintain the engine that drives the region's economy. With over 1,200 trains running every single day, we are the heartbeat of the land. Our ports and terminals are the lifeblood of the economy, ensuring the seamless flow of goods in and out of the country. Through cutting-edge technology, we link South Africa with global trade. From refineries to petrol stations, our pipelines secure the vital energy that fuels every step of progress, every new dawn, and every journey. We set foundations for industries and create spaces where businesses prosper. Transnet, enabling industry collaborations, facilitating trade opportunities, and driving economic growth. When Transnet works, South Africa thrives. Collaboration, opportunities, growth. Growing the future together.
Ladies and gentlemen, allow me just to take some few minutes and make some closing remarks. Just listening from everything that has been said and shared with us today, I just want to emphasize a couple of points that my colleagues have raised, and perhaps to leave you with some few takeaways. The first one I want us to walk away with, as far as Transnet is concerned, is that if we look at the company that we took over as the directors in 2023, July, that was facing a crisis, I'd like to report that the crisis has been averted. And the second thing I want to emphasize and want us to walk away with today is that before us we have a very stable company with solid executives on board, very committed, a committed board, and also to say to you, before us we have Transnet that is showing strong signs of recovery and growth. The third message I want us to walk away with from today is that we have introduced and welcome competition into the rail network, and it unlocks so many possibilities of what is possible. It strengthens the partnerships. It creates so many possibilities for us to drive a number of economies, such as mining and other sectors. So this development is something that not only that we are fully committed to, but we cherish and welcome. The fourth message I'd like us to walk away with from today is that the headwinds remain. Our balance sheet weaknesses remain. Cable theft and vandalism is our reality. And we have to work our way and navigate through all of these challenges. But the resolve and the determination to improve the performance of this company financially and operationally is unwavering. And my last message I want to leave us with is that the investments that we are making in capital expenditure is beginning to introduce unreversible momentum that will be able to drive the speed of change and reform in the organization. Colleagues, once again, thanks very much for coming through and attending our results presentation this afternoon. Thank you.